Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the day's top stories. Restrictions on export of non-basmati rice by India could drive up global food prices once IMF asks India to roll back decision, even as it forecasts a 10 to 15% rise in grain prices this year. Markets snap its three-day losing run to end higher today. Indices led by gains in heavyweights including RIL, LNT and ITC. Sensex up 350-odd points, NIFTY up close to 100 points as traders wait for the US Fed decision tonight. Tata Motors DVR hits an all-time high a day after the company board announces its delisting. Share also hits a 22-month high. BTTV gets an expert opinion on whether the share is still a good buy. Qatar Sovereign Fund is eyeing a minority stake in Reliance Retail, could invest $1 billion to buy a 1% stake, valuing the Isha Ambani-run company at $100 billion. Exclusive ground report from Seoul. Business Today TV brings you the first impressions of the new foldables by Samsung before they launch in the country. The International Monetary Fund has appealed to India to reverse its decision to restrict the export of certain types of rice. According to the world body, the ban could lead to a spike in food prices across the globe. The IMF has warned that even without the restrictions, grain prices could rise by 10 to 15% this year.
The past few days have been hectic for Indians in the West. The government's move to ban non-basmati rice exports has sparked panic buying from Australia to the US, from Canada to Germany. Social media sites are replete with videos of sacks of rice flying off the shelves in stores. Images of long queues outside Indian grocery stores are going viral on the internet. Stores have been imposed buying limits, with some hiking prices exorbitantly to cash in the frenzy. Elsewhere in the corridors of the International Monetary Fund, there are fears that the Indian ban on rice exports will only exacerbate the already high food price inflation. The IMF said India's restrictions would have a similar effect as the suspension of the Ukraine Black Sea grain export deal and will drive up food prices worldwide.
Current environment, these types of restrictions are likely to exacerbate volatility on food prices in the rest of the world, and they can also lead to retaliatory measures. So they are certainly something that we would encourage the removal of these type of export restrictions, because they can be harmful globally. And we're still assessing where we're going to land, but we would be thinking that somewhere in the range of 10–15% increase in prices of grains is a reasonable estimate, although we'll have to see exactly how this is going to unfold.
India accounts for more than 40% of world rice exports, and low inventories with other exporters mean any cut in shipments could inflate food prices already driven up by Russia's invasion of Ukraine last year and erratic weather. The government meanwhile restricted non-basmati exports due to a 3% month-on-month rise in prices and 11.5% increase in retail prices over a year. IMF did, however, have some good news for India. The multilateral global body increased India's growth rate estimate this year by 20 basis points to 6.1%.
Is a country with growth very strong and continuing to be strong. It's about 1/6 of total global growth is accounted for by India this year, and inflation is back inside the target range in our estimates. For 2023, we have a forecast of 6.1% growth for India. That's well above the regional average of 5.3. It's moderating after a very strong 2022. But we have an upside revision of 0.2 percentage points for 2023, and that's really the knock-on effect of a very strong ending for 2024 with government and private investment.
The IMF also had a word of warning on global inflation. which it said was declining faster than expected but was not out of the woods yet. It also had concerns about central bank rates, which are at their highest in several years.
Monetary policy is already taking a chunk out of economic activity. We're seeing the increase in interest payments. We're seeing the contraction in lending. We're seeing signs that the economy is cooling off. And that's going to help bring down the sort of underlying inflation pressures back to central bank targets. So it's already had some effect and will continue to have some effect. Now,
there was another big warning from the IMF. It said international trade and manufacturing indicators were down and that savings accumulated during the COVID pandemic were declining, leaving fewer buffers to withstand future shocks. This was especially a case in advanced economies like the United States. Bureau Report, Business Today Television.
Shares of Tata Motors DVR jumped as much as 18% in trade today, extending gains for the sixth session to hit an all-time high of 437 rupees. Shares rose after the board approved delisting of the DVRs. The board also decided to issue 7 ordinary shares of Tata Motors for every 10 DVRs. The Tata Motors share also touched a 22-month high today. My colleague Sakshi Batra spoke with Sunny Agrawal, SBI Securities, about how investors should treat the twin stocks going forward. Listen in.
So Tata Motors DVR shares really gained 18% intraday today as a reaction to the news. 52-week high levels for this one. Again, Tata Motors also has been looking up as well. Sharp move on this one. I wanted to understand what will the conversion of DVR shares to Tata Motors shares really mean, and what should investors really do now in terms of the shareholders of Tata Motors and the shareholders of Tata Motors DVR. For both of them, what would you advise?
What I believe is that the arbitrage opportunity which was available yesterday is not present as of now. So if I remember yesterday based on the yesterday closing price, the arbitrage opportunity was for 23%. But we have to keep in mind that this transaction will take 12 to 15 months to consume it. At the same time, since these shares will be issued in the form of deemed dividend, there is an angle of tax also to attach to this transaction. So hence, despite of 23% clear theoretical arbitrage that was available yesterday evening post the closing of market, the stock has reacted only to the tune of 14%. And this is taking into account the implication of tax. At the same time, the opportunity cost for 12 to 15 months during which this transaction will be consummated. Now, going forward, what I believe is that both the stock prices of Tata Motors DVR as well as Tata Motors will move in tandem with the existing swap ratio. So the swap ratio is 10 share of Tata Motors DVR will get a 7 shares of Tata Motors, which is an ordinary share. So that's the swap ratio, and I believe that going forward the stock will continue to move in the same swap ratio, and it will move in tandem. So there is no arbitrage opportunity much more left in the Tata Motors DVR and Tata Motors.
Benchmark equity indices closed higher today on the back of gains in shares of L&T and RIL, despite caution ahead of the rate decision by the US Fed later tonight. The FMCG sector also helped the index close higher, followed by shares of construction companies. The Nifty and Sensex both up about 0.5%, Sensex up at 66,707 at close, and the Nifty at 19,778. Top gainers today, L&T has been in action, ITC back in the green, Cipla, Britannia and Sun Pharma, a couple of those pharma majors today. On the downside, the Bajaj Twins, M&M, Apollo Hospitals and Tech Mahindra. Markets could go higher still from current levels, with the Nifty likely to rise a further 10% in the next 1 year, says Vinod Karki, Head of Equity Strategy at ICICI Securities. In an exclusive conversation with BTTV's Shailendra Bhatnagar, the veteran analyst said that India's capex cycle is likely to expand over the medium term, putting sectors such as infrastructure, financials and real estate much higher.
Given the way the markets are headed, how do you think sentiment is placed at the moment?
So what has happened, thankfully, and a stroke of luck or whatever you may call policy, things like that, just after COVID, at the time when no one would have thought about it, the whole capex cycle in India, including the real estate cycle, and the massive policy initiatives by the government in manufacturing, attracting manufacturing within India. Also, luck played along because China was getting impacted by this China plus one strategy. So I think this is coming out to be one of the most interesting times. We haven't seen such an environment. I mean, this environment played out during 2003 to 2010 period, where these elements played out. And this is showing up. And more than us, actually, now the foreigners are getting excited about India's story. We know that things don't change overnight, but I think the foreigners who look at us now are getting very excited. And Indians have always been optimistic about how the local environment will go. So I think it's a very interesting time for investors to look at growth stories.
To looking at sectors which are consumer facing. And the first thing that comes to my mind is the boom that we are seeing, at least on the auto space. 4 or 5 stocks at record high levels, both commercial vehicle makers, Tata Motors, Ashok Leyland, and in the passenger vehicle space, Maruti headed for 5 digits. All the 3 top two-wheeler companies doing pretty well. And we've seen a fairly strong boom coming into the auto ancillary space. How are you looking at the automobile sector? Are there still valuations which are, fairly okay, or has this outpriced itself at record highs now?
So auto for us is part of, so as you said, the consumption basket. So what is happening right now is a very peculiar thing. So which are the big ticket consumption items in the economy? One is houses. Then you have cars and motorcycles, and that to the premium ones, the premium cars, premium motorcycles. Then your travel, tourism, leisure, entertainment. If you observe, all these activities are very robust. So we talk about this K-shaped recovery in consumption. So that's showing up here actually. The mass consumption, low-end consumption, rural-based consumption, that's where the challenges are, and we are not seeing any robustness there. But if you look at where the formal sector, people who work in the formal sector, their wages are rising or they're getting more jobs. If you look at the EPFO data, the number of people who are getting hired in the formal sector, they are rising, their incomes are rising. So we are seeing this dichotomy in consumption where higher end premium discretionary consumption, be it auto or houses or travel tourism, entertainment, eating out, all these are showing quite robust trends overall. So we like this space wherever it allows us the valuation comfort. Some of these internet companies also are catering to some of these activities. There also, we have some positive ratings over there. So overall, the consumption basket, I would break it up into, as I said, premium areas. Across the board, there's quite a good demand. It's only the low-end mass consumption where there is a challenge at this point.
Top market guru Ramdev Agrawal on Business Today TV very soon. You can send in your questions on the WhatsApp number on your screen by 4 p.m. Friday. The April to June quarter was particularly good for Asian Paints, with the company posting a 24% rise in profits over the previous quarter. Its gross profit margins expanded a whopping 530 basis points. However, the company's international sales saw a dip. BTTV Sakshi Batra spoke to Asian Paints CEO and MD Amit Singhal about its upcoming festive season plans, as well as increasing competition in the paints business.
Would you be able to sustain these margins at these levels, and what would your overall outlook be for FY24 on margins?
So we've seen softening of raw material prices both in Q4 and Q1 to that extent. In fact, Q1 saw about a 2% kind of a deflation with respect to raw material prices. So I think the issue of margins is directly correlated in terms of how obviously the raw material prices behave as we kind of go ahead. We are seeing a certain uptick with respect to the crude prices in the recent number of days and weeks to that extent, and also a little bit of a volatility with respect to the rupee dollar kind of positioning. So I think it will all depend in terms of how these things stabilize and what is the definitive trend we see in the next about 4 to 6 weeks in terms of going forward. As of now, we are maintaining our guidance with respect to the PBDIT band of 18 to 20% in terms of what is there. That is definitive for the year in terms of going forward. We are also looking at higher advertising spends and below the line spends to really invigorate the market in Q2 and Q3 going forward. Therefore, at present, I think we are maintaining the band in terms of guidance which we have given earlier with respect to our margins.
Okay. What's the demand trend across, the various industries that you cater to, and the outlook on demand from the festive season going forward from here?
As I said, overall, from the point of view of demand, the project sales institutional business appears to be strong. I think the whole real estate sector and the construction activity, which will continue to that extent. So therefore, the whole builder business which comes in, or even from the point of view of government spending, given the oncoming general elections next year, I think some of those trends should continue, which would kind of really, continue to kind of rekindle the overall projects demand to that extent.
Samsung hosted its first in-person Unpacked event in years in Seoul, South Korea this morning. The company unveiled 5 new devices at the event, including its much-awaited new foldables, Galaxy Z Flip 5 and Galaxy Z Fold 5. The new Gen foldables are more powerful, sleeker and smarter than the previous generations. Business Today TV's technology editor Ayush Alabadi had exclusive access to the new ecosystem before the grand launch event. Here are his first impressions.
Annyeonghaseyo from Seoul, Korea. Hello and welcome to Tech Today. I'm your host Ayush Alabadi and we're coming to you from Seoul at Samsung Galaxy Unpacked. And it's time to unpack. Of course, it's that time of the year again when Samsung reveals their ecosystem with 2 flagship devices which are in my hand right now. The Flip 5 and the Fold 5. Now, usually the headline grabber happens to be the Fold 5. And this one sort of, comes in and hides in between all the details. But let's give it its due importance this time because there's monumental changes with this device. Incremental here because the Fold was already a top dollar premium flagship. Yes, it had a great camera. The camera kept getting better. So there's incremental innovations. For example, better peak brightness. One major change is when you open and close the hinge, it's a lot smoother. These colors look nice as well. The camera has features from the S23 Ultra. That's because now it has a Snapdragon 8 Gen 2. So it comes with those capabilities which are in its flagship S23 Ultra, which will change come, February when the next S24 Ultra comes in. But for now, this can take on perhaps the iPhone 14 Pro Max from the Android world. And yes, guess what? It folds. It has a bunch of other features as well, of course, with Snapdragon 8 Gen 2. And yes, a better camera, the display is a little better, and the phone looks good. Honestly, a small iteration or a change from the previous Fold. But this time, they mean business with the Flip. Look, we were talking about it last week on Tech Today, how we've seen the evolution of flip phones in 2023. First came the Flip 4 with just a minimal notification, some selective widgets, and you didn't have that much functionality on the external cover display. But then came the Oppo Flip, which we got you live from the launch event in London. And after that came the Moto Razr 40 Ultra a couple of weeks ago, which has the biggest external display you've seen on a flip phone ever. Now, Samsung has really caught up, but it's not only about the size of the external display, it's also the functionality of this particular display. You can do a lot more things on it. You get a bunch of widgets as well, and it's a very smooth, intuitive UI. If you can actually use a flip device from this external cover display without even opening a flip device, it becomes a utilitarian, pragmatic option for you. So you're going to get the full review on Tech Today, but there's other devices launched as well. There is, of course, the S9 series, the tablet, very smooth 120Hz displays. I really think this is Samsung really taking the fight to Apple. They come with water and dust resistance, so does the S Pen. And we've had, an interesting first impression of this device, but again, we'll have to bring you a lot more once we have this, not here in Korea, but back in the Tech Today studios in Mumbai. But flagship specs ready to take on the iPad Airs and the iPad Pros. Now when you talk about the watch, Well, the Watch 6 and the Watch 6 Classic. If you look at these particular watches, and yes, I'm wearing an Apple Watch on this wrist, very premium. Now, I just want to be entirely sure about ECG functionality and AFib. Look, these are serious health and fitness features which Samsung watches have in different jurisdictions. But where will it come? Will it come to India? Well, we'll have to wait and see whether that sort of functionality comes to India as well. But very premium to look at, very premium to touch and feel. Honestly, this is an ecosystem which is worth exploring a lot more. And we've got you the first look here from Seoul, Korea. Obviously, you can tune in to the Tech Today website and our social media platforms for a whole lot more. But until then, I'm going to geek out here in Seoul and understand a little bit more about how Samsung's working on water resistance with these devices, how the durability of 200,000 folds, that would be maybe 100 folds a day, that would last you for 5 years theoretically. What does that mean in practice? All that and a lot more, but stay tuned to Tech Today.
All right, let's take a look at what else is making news in the corporate world. Go First has successfully conducted its test flight days after the DGCA granted the airline permission to resume operations with 15 aircraft. The flight was conducted out of Mumbai Airport and was a mandatory requirement after the airline was grounded after it filed for bankruptcy in May. DGCA had allowed Go First to resume ops with 15 aircraft. Shares of RBL Bank jumped more than 7% today on reports of the Mahindra Group buying close to a 5% stake in the company. The deal was made via one of Mahindra entities through open market operations. Mahindra is reportedly keen on increasing its stake in RBL Bank to 15 to 25% if it gets approval to be a strategic shareholder. The Yatharth Hospital IPO was fully subscribed on the first day, while the retail and non-institutional investor portion was fully subscribed. The QIB portion is still to be subscribed fully. The hospital chain has a price band of 285 to 300 rupees and is raising around 687 crore rupees. The IPO closes on Friday. Asia Healthcare Holdings, a TPG-backed investing platform, is planning to expand its portfolio and double its investments in single specialty healthcare businesses to over $500 million in the next 5 years. The key focus areas for investment include oncology, women's and children's health, and the implementation of technology in ICUs. We spoke with Vishal Bali, Executive Chairman of the group, about the plans. Listen in.
The investment plans in single specialty healthcare businesses is quite impressive. Can you tell us more about this expansion strategy?
Yes, Sunita, also there is another, so ophthalmology was one. So as you know that that is an investment that we made direct through TPG Growth and not through AHH, which is in Dr. Agarwal's, which is the largest eye care chain in the country. So if we look at within our fold, we have done actually 4 specialties already. We did cancer, we did mother and child, we have done IVF. We have done, through the TPG Growth ecosystem, we have done ophthalmology. A couple of areas which look, which again fit very well into the economics of a standalone single specialty box. One is gastroenterology, because there, whether it's outpatient gastroenterology or inpatient gastroenterology, it's like a self-served specialty in itself, which transits from outpatient GI to inpatient work, particularly around the minimally invasive surgical work that happens today. That is one. We are excited by the prospects of urology, nephrology, because there again, these are 2 specialties that function well together. We've been looking at the right opportunity in the pathology diagnostic space, because we believe that now the large ecosystem that we run at AHH, having our own pathology services company also as a part of this whole ecosystem will power us a lot more. If we have our own enterprise in that space. So these are a couple of areas. So Nitu, the thing is also that not every specialty actually falls under the single specialty box.
That's a wide range of specialties, Mr. Bali. Can you also explain the rationale behind these specific areas of focus?
As I said, that in that space, we see a massive, massive gap in neonatology around the country, right? Because childbirth does not stop only with the mother. Childbirth continues with the newborn. And newborn mortality in this country is significantly high. So if we have to reduce newborn mortality in this country, you need good neonatal care along with good obstetrics care and good gynec care in the tier 2 cities around the country too. So I see a big opportunity and a white space there, which can be fulfilled by players like Motherhood. And that is exactly what we are doing, through Motherhood in terms of using technology, using clinical acumen, using infrastructure, creating a standardized box model, which has all services built in and not just only birthing. So we have now already invested close to about $200 million in AHH. And this has happened over 5 years' time. So if I were to, put a lens on the next 5 years, I would say that this could double up.
That's where we leave it on the show tonight. Thanks so much for watching.